Hi, welcome to the Market Alert for Thursday, the 28th of January 2016. So yesterday we saw the start of the session. The market didn't know what to do. Then we had a sell signal, and we saw this being filled just into the early part of the session there, around 2:45. And then the market undecided about what to do. I'm just speeding things up here so that we can keep the market alert short. And you see the market coming back, we get a potential buy signal, and then the market drives through the actual scalp. I remark the trade up because I'm looking for the market to go down to this level here, which is the 16,000. The 16,000 is a major psychological level for this market, which I've spoken about dozens of times in the market alert. It seems that the powers that be want to keep the market above this level. So we see the market trying to come back. Very narrow bar, given the previous bar was a very wide ranging bar, and price is then heading back towards the 16,000 there. The market hits this, there's 53 points profit, but we've got a few minutes before we have to get out of the market for the crude oil inventories, which are to be released at 3:30 p.m. So the market's trading down now, 54 points profit, coming back towards the 16,000. We've got the crude oil inventories to be released shortly. I know that this is a major psychological line, and at this point take the profits off the table, which you'll see in a moment. Just deleting the lines in the trade off this chart, ready for the news at 3:30 there. So the market is waiting for the crude oil figures now, so we're just going to move forward there until we get the release of the news, and then we get a sell signal there, but the market finding support at the 16,000 area there, and then eventually we see the market move higher. And this is really odd and strange, and the reason for that is that the crude oil figures actually came out a lot higher than forecast. And also, according to Zero Hedge, we had a situation where the stocks storm green. Oil surges after Russia says we'll discuss possible production cuts with OPEC. Yet if we go back to the figures, the crude oil figures when they were released at 3:30, you will see that we had a surplus of 8.4 million barrels, and this is the highest they have had for a very long time, as you can see there from the chart. So we've not had this since the beginning of 2015, a year ago, and yet the stock market and crude oil shot up, and that's because on hearsay that Russia were thinking of cutting production. So the market then made its way all the way back up on this rumour and manipulation, and traded sideways until we got to the Fed statement at 7 p.m. Again, you don't want to be in the market when these meetings are on, in particular the FOMC, so these signals are invalid that you see here. The market moves higher, and you then see the Fed starting to issue the statement. Yellen talking about, whoops, I think I may have got it wrong. And again, if I just switch back to Zero Hedge, you can see Fed backpedals hawkishness, hints at policy error, monitoring global developments amidst growth slowed last year. Although she's still barking on about this strong labour market, which of course, if you look into it a bit more, you'll find that they took 6 million figures out of the overall figures to manipulate these as well. So the Fed's got it wrong. I've said this all along. I wouldn't be surprised if they don't backtrack and we don't have QE4 by the end of the year as well. They'll do anything to keep this Ponzi scheme alive. The only reason they raised rates is because they were painted into a corner and their credibility was at stake. And a lot of central banks, as I mentioned in Monday's market alert, there is a credibility issue among all central bankers. Now, Carney doesn't know whether it's Christmas or Easter most of the time. You can't believe a word from him. Mario Draghi, the former Goldman boy, as Carney is a Goldman boy as well, former one, he's threatening to print more money as well to try and get out of the mess. Japan have been trying it for 30 years. It doesn't work, but they obviously can't see this. They think they have the magic touch and they're going to turn the market around. And Yellen, unfortunately, decided to save face and increase rates, and we've had nothing but carnage since, which again I've spoken about prior to the rate increase in the market alerts. It just beggars belief, frankly, that somebody would consider increasing interest rates when they've been on emergency rates for 8 years, following the Great Recession, as it's now known, among financial experts. That's the way they've labelled the 2008 crash, the Great Recession. They haven't seen any recession yet with what's actually coming when the deflation hits from China. But that aside, they couldn't actually see what most people can see, that there is a major slowdown in the background. And the last thing you would do, anybody sensible would do, is actually increase interest rates. But like I say, it's a credibility issue, and they're trying to normalise the markets as well. So here you can see the market's reaction. Unfortunately, we don't get a signal as the market moves lower there, and by which time I'd given up watching at this stage. So the market giving up what it had actually gained earlier on in the session there, where you'll see the market coming back. So let's have a look at the bigger picture in the daily chart and see what the market is likely to do next. So we've got a situation here where the market's still range bound. It tried yesterday to break the 16,136 again. Remember I mentioned this one yesterday, interesting level as well. Got the 16,000 support, which is going to be tied in around this level here. This is, just delete that one, is going to be around, there you go, 15,873. But the 16,000 area is a crucial area for this market. In today's news, what have we got? Are they wheeling anybody else out today? No. Pending home sales, unemployment, durable goods, most of these out at 1:33 p.m. Medium impact pending home sales. I'm not expecting this one to come out as forecast, but we'll see. As we're in the sort of winter, you tend not to get too much activity in the housing market. It tends to be from the spring onwards. And then finally, in the implied volatility, let's just bring this back in. In fact, let's just have a quick look at Shanghai, see what's happening. Down 2%. It was down 0.5% when I started to record the market alert. It's now dropped to 2%. So again, some pressure from the Far East to the downside there. 20% for the implied volatility, 20.03 to be precise. And again, in the chart you can see the market, interesting picture from yesterday, not actually increasing that much, but as I say, they know the market's got a lot more downside pressure, and it looks like the volatility is being held back as well, which is a first, because normally now you would see this spiking at 100% increase from the lows to where we're currently trading at as well. So there's a bit more to go in this as well. But you can see there's a volatility increase in the market, but we need a big spike like this to find any sort of temporary bottom in this market. Right, that's it for today. I will see you in tomorrow's edition. As ever, thanks for watching, also for your support. See you in the next one.